Jonathan, for putting all this together like always. And I think yesterday was an amazing start where we saw the whole Africa trade flow of business and opportunities that are there. And one of the conversations always is, where's the money and how are we tracking the money? So when you look at over the past 2 decades, hospitality capital has evolved from traditional ownership to a very sophisticated global ecosystem where investors, funds, banks, innovators have all come together. And today we look at the intersection of rising costs, technology disruptions, and we saw an economist saying that it's not doom and gloom, but we need to be very mindful and careful about where we put our money in, yes? And it's not also about just where the money is available, but where is it going, how is it deployed, and how smartly it's deployed. So I think on that note, let's kickstart. What I would request is, please, I think everybody knows all of you, but still 10 seconds on that. And let's look at what is the current state of hospitality investment globally? How is it different in the Middle East and Africa region? And have we returned to the pre-pandemic level of confidence, or we are just still recalibrating to see how we look at inflation, how we look at the shifting travel trends, the social issues that are happening, so on and so forth. Yeah? So sure. I think, let's start. David?
Yeah. So, happy to take the first part of the question. So at macro level, we can definitely confirm that trading across the globe is, in most part of it, is definitely above pre-COVID levels, as in RevPARs, let's say 2019, compared to what we're seeing today, except in certain markets in Asia Pacific. If I recall, the last data we've seen indicates that RevPAR is at 92% of what pre-COVID levels have achieved, or have, so to say, peaked at. From a transaction volume, so we've just looked at, year-end, third quarter year to date, not year-end, but we're at approximately $41 billion of hotel transaction volume across the globe. That's very much in tandem of where we were basically last year. But what's interesting is that we're starting to see certain continents falling short compared to others. So Europe and Asia Pac gained more market share than in the US. I think the US has been a little bit sluggish this year, mainly driven by a bit of uncertainty around the tariffs. Cost of debt is still very high.
But also a strong dollar.
I'm sorry?
But also a strong dollar.
Quote unquote. No pun intended. But the private equities are definitely back in our landscape, and they're the ones usually dominating the transaction volume, usually followed by institutions, non-private equity institution, high net worth individuals, even hotel operators effectively are part of that investment landscape. So the US actually has a higher market share than, Europe has a higher market share than the US, which is not very common. I mean, you've talked about a couple of decades of historical data. It's always been US 50%, Europe 30, Asia 20. Now I would say Europe is around 40%. Europe's been quite busy this year. Some portfolios, large single asset trades, the high net worth individuals are definitely back into that space as well. Whereas in the US, we haven't seen a whole lot of big box trades. Some of them happened in Miami lately and New York, but unlike the past years, I think the US still has some way to go. The other element that is actually more on a positive note is that I think everybody's in a position where they are feeling that the cost of debt have actually peaked earlier this year, and they are going to start slowing down a little bit. How long it's going to take, maybe not as fast as people would have anticipated, but it is coming down. So we're seeing a lot of creativity in that space, either not just from traditional lenders, but the credit funds are taking a bit of a more long-term bullish view as to what that swap or what those spreads are going to look like in the medium term. Okay. In the Middle East, just to conclude on that note, I would say the most liquid market has been Dubai. I touched base upon that yesterday. We should expect $1.2 billion of hotel transaction volume just in Dubai this year. Yeah. London on a good year will do somewhere between $1.5 to $2 billion. And Dubai has been really driven by some very big box trades, some of them in the public domain, some of them are not. So sorry, can't really elaborate too much on this. But there's also been transaction across the other side of the spectrum. So for international investors who can enjoy the aesthetics and the cosmopolitan side of the Dubai lifestyle, no, there is a mid-market and there is a select service market, basically a movement as well.
Thank you. Thank you for that. Olivier, just building on that, where do you look at the investor appetite right now? Is it luxury, mid-scale, resort, mixed-use development? Because that's kind of the flavor of what you're doing now from an investment perspective, yes?
Yeah. Well, good morning. And as the first question was about the intro, so just to introduce Casada for the one who are not familiar, that we are a leading real estate private equity fund dedicated to hospitality in Africa. So our mandate was initially on sub-Saharan Africa. We have raised $500 million with the backing of Accor and QA, and we have developed 20 hotels on the last few years. So now for us, it's to become truly Pan-African. And the next step and market will be about Morocco. Just to come back on what Amer just said, is very important also to recognize that many years ago, hospitality in terms of real estate market was not the preferred allocation of resource. And we see that on the last years, there was a very interesting trend, and now most of the key market players, M&A, 80% of what they do probably is with hospitality. That's great. Then the question is it now coming to GCC or in better position to assess this or not?
Hopefully.
In Africa, not yet. And that's, I think, a key opportunity to see how in the future there can be a better connection between the international capital and the opportunities that exist in Africa. In terms of segment, this is, I strongly believe, valid in every segment. And what is interesting is that now you have some new opportunities and new market segment. Let's take an example, branded residence, where in the past it was really about luxury. And now you have 40% of the development which are not on luxury. So you can find in the market, and especially on the African continent, given the size and the population, a lot of opportunities in different market segments.
Thank you. David, from your point of view, when you look at smart capital, and it's become a very popular phrase where everybody's talking about smart money, smart capital, all of this, what does it actually mean in practice? How do you look at, when you look at structuring deals from an investor perspective, how do you see the difference between how 20 years back deals were structured and how the flow of capital was happening to what you see now?
Yeah. Thank you. Thank you for having me. I'm David Tis. I'm CEO from Omnam Investment Group. We are developing hospitality projects all across Europe. To answer your question, I think it has two layers to it. And whilst in the past people were looking at equity, debt, real estate, looking at the asset on its own, trying to move away from the operation, the brand, what is entailed. I think what we see today with capital is that they are looking very much into the brand equity and the brand capabilities and how does it affect the real estate. And the location, I don't want to say becomes secondary, it will always be the main one, but the level of understanding and the need of the brand that you are working with to operate and to create the right experience to attract guests becomes very important when looking at how you basically stack the capital across the whole P&L. And you see basically whether it's private equity or any others that are becoming much more experienced in looking at it and not just underwriting it from a real estate perspective. Generally, I think that you see a very big shift, and Olivier tapped upon it, that it's not just luxury, but this whole thing about community and creating a lot of communities in all the hospitality projects that you are doing is something that become extremely important. People want to be part and willing to spend for it. on different type of segmentation.
But do you see this evolution being driven more by necessity, tighter credits, inflation, innovation, long-term potential, and what opportunities that are coming in? Why do you think this shift has happened?
I think the shift, and this is my personal opinion, the shift has happened because of human nature. And I think post-COVID, there was a phase where people were looking at kind of revenge, and people had some money that they couldn't travel, and then they invested. But I think the last few years have shown all of us that people understand that life is important. You don't know where things are going to happen, and you want to be part of something and have meaningful life. And this goes across all type of investment and how things are looking at, because it's not enough anymore to just make an hotel room. That's gone.
Yeah, fair.
So, and I think it kind of drags, and then everything comes,
And I think that trend is going to continue. It's not going to stop.
Yeah.
It's,
I think,
Amir, how do you look at the return on investment when you look at everything is going up? Financing cost is going up, construction cost is going up, labor costs are going up. How are investors recalibrating the return expectations? Because, we have done enough work together. Our expectations are always, when you're going out, is very different. But has that changed? What are you looking at it today?
Listen, it has changed substantially, and I think it really boils down ultimately to the type of capital that's actually investing. So when cost of debt was, through the roof, and kind of just still there, the private equity capital just subdued a little bit. Who took over? It was high net worth individuals who maybe don't need the sort of leverage that some institutions may require. It was maybe the time for owner-operators to consolidate further, and they would take a much longer-term view on their IRRs. Whereas developers, for instance, traditional hotel developers who are also generalists here in the UAE, they will take a view definitely that whatever they were building pre-COVID, the return profile they're getting now is completely different than what they were getting, 2016, 17, 18, 19. And I think that created actually a shift in that capital looking into a lot more acquisitions than just traditional development. Otherwise, all alternative is just do a mixed-use development. Branded residences, you mentioned it earlier, has been an incredibly liquid segment over the last 5 years. To put that in numbers, last year we tracked close to $5.5 to $6 billion worth of transactions purely in the branded resi market, and that's at 10% out of the primary and secondary residential transaction volume. These numbers are staggering compared to international markets. You're not going to find those in your global destination hubs. So ultimately, developers are saying, if it's not accretive for me to build a hotel today, and I still want to be part of that segment, you got to find opportunities. If you cannot find opportunities, they're going to be patient. Smart capital is patient and is very, very disciplined. Now, there has been some trades. We do expect that trend continues, because those are effectively the signs of maturity and sophistication. And with that comes creativity, not just in the debt space, as David mentioned, but also in the equity space. I'm happy to say that out of the dozen trades that happened in Dubai this year, 9 to 10 of them were FDI, coming in different shape or forms with local partners. And that sort of behavior is very encouraging, right? Because the question or the challenge we as JLL, we used to get before COVID was always, okay, we know your hotels are doing great. We know your F&B's, crushing it, but what is the certainty of exiting? How can I be certain that I can buy a hotel and actually exit from it, right? I mean, we talked about that in other markets in the Middle East and Africa. And today, I don't think that question is as relevant as it used to be before. So your developers might leave, some room for institutions who are happy with your 6 and 7% every year, and maybe they're not getting, your double digit as historical data showed.
But David, on this, when you look at valuations today versus valuations what Amir was doing, let's say 10 years back, not 20 years back, today I think there are a lot of other things that you look at. You look at operational efficiencies, you look at brand partnerships, you look at ancillary revenue streams that can be created. You see these things affecting asset valuations. And knowing your brand, I'm sure, can you put a flavor on that?
Yeah, I think, there is a lot of, question about rates and where rates are going to go definitely in the ultra luxury segment, even though there's a lot of confidence around it. The brand and the location versus the brand and cannibalization between, reservation system is something that affects valuation quite a lot these days, and the brand needs to explain if they operate in a city and they have 10 different, brands under one umbrella that taps into the same reservation system, how certain your P&L is, where they need to share the cake with each other. So I think these are things that leads to also sometimes getting a higher valuation, which we hear it all the time from the different, brokers of just working with a white flag or having the flexibility of changing a brand, which would bring to higher valuation.
Inside jokes, way too many. in
Yeah.
this conference.
Amar is always advising that.
Yeah.
Yeah, I think one of the things that is also today coming up is ESG and ESG-driven investments. I think Olivier, especially with all the new developments and all in Africa because of everything that has happened in the past, how important is this? And is this kind of a very central part of your investment conversations that are happening in Africa, especially?
No, it is a central part, and it's totally related to what we have just discussed, meaning that the view that the opportunity will be based on an attractive cost per key, and then you look at the multiple expansion, the reality is that more and more, our view is that we are going to a market which is more a question of yield, and therefore you have to look at different levers, and you have to combine the focus on the operation, the right capital structure, and then the right size to get the benefit of the scale. And ESG is part of it, meaning that you have, and talking about the exit, if you want to keep the value of your asset and to find a potential of exit, you have totally to incorporate the ESG. It's part of the due diligence since day one, and then this is what you do along the quality of your asset. And especially in our industry, which means that we have to look at the energy efficiency, but then it's how we develop local talents, how we work on food waste management. So you have so many components which have to be fully incorporated in your operations.
And I think what you see more and more is that sustainability also has to be commercially sustainable. So in all these conversations, I think it all ties up together. But where do the local regulatory framework, incentives, the PPP models, all of that, how are they helping and what is the gap?
It's new development, and it's interesting to see how our industry is perceived and positioned. And I have to say, well, congratulations for what you have done yesterday, because having here the Minister of Economy and Finance and taking the lead on organizing an investment summit and the link between UAE and Africa continent is, I believe, a very great example on how you can find the connection between the political decision and positioning, then to facilitate and create ecosystem. And this is what we see in a number of countries on African continent. We're going to create a new fund dedicated for Morocco with the fund Mohammed VI. So this is where tourism is considered as a priority in the country in terms of job creation, in terms of contribution to the GDP, and then you have some public financing, then looking for the expertise of fund manager and foreign capital to come to the country. And I believe that's really what can make a difference in a number of countries.
For those who missed it, in 2023, tourism and hospitality was made the 5th vertical of economy for UAE. And what we see is that Africa is a very important element of that corridor for us. So yesterday we had almost 23 countries represented by their ministers of tourism, ministers of economy here to have a very candid conversation and dialogue with the businesses from UAE. And I think it was quite successful in that way.
But this is where my personal challenge really falls into this, because from what Olivier said And I think from what Mr. Philip Barnes was sitting here explained, I mean, and they've put it so well on the impact of your P&L and your hospitality investments. And kudos to your platform, because you've very much got support from your DFIs, the green financing, either greenfield on your acquisitions. But this seems to me like it was a Casada effort rather than the regulatory framework forcing you or actually asking you to do it. And this is where we're seeing substantial fragmentation across the globe. And it's really, it boils down to the political system of that continent. You look at the past few years, I mean, the sort of accreditation European investors were getting for ESG-led developments or acquisition was substantial, phenomenal. It was great, and I think maybe that took a part in that too.
100%.
So we can, the theory is amazing, but there was also a substantial, influence, political pressure to get that up and running. And you look in the U.S., is that really as important as it was the past 4 years? Maybe not. So I think there's many stakeholders involved in it. Yeah. We all know it's good. We all know it's valuable. We all know it's super creative in the long run. But you kind of need a bit of pressure from that side of the equation too.
And everything helps. Yeah, that's why we have this dialogue here, where the main crux of all of this is where's the money. Yes, for all this conversation, financing is really key. And David, are you looking at banks, alternative financiers, looking at hospitality as now mainstream, as we have been talking about it? But is the structure there? Are you looking at creating bespoke structures of investments depending on which markets you are engaging in, or there are structures that are available which are mainstream that you can use?
Look, I think it really relates to in different countries and markets where there is no one solution or one answer to each project that you do. I think that there is one thing to be said, and you spoke about the ESG, and there is and there needs to be a shift, which we see already between what I call greenwashing to real washing. And one thing that I think needs much more work is you can find a lot of programs, again, in different countries when it comes to the development phase, how you finance yourself and which type of accreditation you can get, whether it's LEED, BREEAM, etc. When you go to the part which is the operation, this becomes much more, call it shallow in terms of what does it bring, where we think and feel today that this is not less or sometimes even more important, in a sense that this is your society, this is your community. We should practice sustainability on a daily basis. And if you have a 100-key hotel, every night you will have, let's say, nice occupancy, at least 160 people, which are potential good ambassadors to the world. 100%. And what are we doing in order to basically make it better, and which type of incentives you are getting on an asset basis from the financial world, from the different ministers to push it. And I think this is a place where it needs much more push and not just focus on the things which are important with global world warming, etc., but also with people, because ultimately 100%. We are the ones that needs to live here.
And congrats on your latest baby, which is in Como.
Yeah.
And I think that's one of the best examples of how you take an asset and create value out of it, which is something I think is amazing to see. I think we have got 3 minutes, so to each one of you, the next 3 to 5 years ahead, how do you look at investors and developers in hospitality? What do you think are the aspirations, and where do you look at capital that will get allocated and structured?
I think developers have to, and investors in general, have to find a way to create value beyond just investment, and find a way to still make that sector accretive for them, and get away from the traditional approaches of either more luxury or cut costs in hotels to generate returns. In my opinion, I think development pipeline in a big part of the segment may be a bit sluggish in the UAE because of construction costs, because of high cost of debt, because of high land prices, because of scarcity of tier 1 and tier 2 plots. We're seeing the bulk of development in Saudi Arabia at the moment, and this is where we really see an incredible opportunity for a diversification in the pool of capital. The equity guys can position themselves in the debt side. The international investors can be part of that FDI story. The private sector in Saudi Arabia is substantial and should definitely not be undermined. They can definitely be part of that story until we have a very clear pattern around freehold ownership laws and how all that's going to work across your tier 1, tier 2 markets in Saudi Arabia. Again, just to be clear, there is an incredible opportunity for white label operators, development partners, owner operators to come and join venture with existing developers. The capital's there, trading's there, the liquidity's there, the banking system is phenomenal, the supply chain works. So all your points, your criteria have their own box ticked. Africa, again, you got to work with partners on the ground. Trading fundamentals are there, the economics are there, the macros are there, and I think more and more liquidity from the likes of Casada and many investors in the room today are going to create a market, irrespective of what those returns look like. It doesn't matter. The more you see liquidity, the more you see attraction from international institutions and high nets.
Olivier?
Yeah, I mean, smart capital means in the future to really be much closer to the operation, and it's about your value creation and having investment platform more and more so with operating capabilities. And in terms of market, well, that's a message to an invite to David and other key market players on one part, very active on South Europe, and to look at the next market, which can become Morocco and African continent, and of course, the investor in GCC with all the ties that exist between GCC and African countries.
Thank you. David?
I think, said it. For me, it's honesty, generosity, community. That's what's going to make us win.
I think hospitality investment is in a very positive inflection point, and the winners are not only going to be the one who allocate capital wisely, but also look at driving innovation, sustainability, community impact. And I think, thank you for all your insights.
Thank
we
you.
are on time.
Thank you for having
Thank
us.
you.
Thank you.